What's going on, guys? Today I'm going to be telling you about 3 stocks that I'm buying in the month of May. I hope you enjoy the video. If you do, leave a thumbs up. So for this first stock, I'm going to be showing you Carnival Cruise Line, which has dropped significantly from its highs in the 50s. I'll leave up all the numbers you need to know on the screen over here, but I'm going to be going through a breakdown of how much of a return you can get on this stock because it is an unbelievable price right now. So the stock is currently having a $7.80 52-week low, and in the 50s 52-week high, as I mentioned. They're at $13.93 right now, and they had to cut their dividend. It's suspended now. They're not paying one at all. But they're going to bring it back, I believe, in 5 years. But I'm not playing this for dividends at all because this is a huge potential growth opportunity. 300+%. If you buy in low enough, 6 times your money or even higher, it's just a huge opportunity. So this stock is a cruise stock, obviously, and they had to suspend all of their cruises for a certain amount of time. You can read up on how long it was, but sometime in the summer is how long they suspended it. It's probably going to last even longer than that, but they have enough cash and debt to sustain them until the end of the year or a little bit longer. So I think that's going to keep them running, and I don't think they're going to go bankrupt, but that's your decision to make. You don't need to listen to me. You need to do your own research. Now let's go into the second stock. The next stock is Disney, and I think everybody knows quite a bit about their business, so I'm not going to go too far into their business. But the main thing from a growth standpoint that I want to talk to you about is Disney Plus. Now I know a lot of you like Disney Plus, all of their great content. They have original content like Mandalorian. Tell me below if you're liking that because I'm waiting for season 2. I love it. Baby Yoda. Now, anyways, so Disney, they have, their price right now is $105, I think, probably, and again, I'll leave all the numbers over here. And their high is some 149, their low is, I know it's like 79, but if you buy this company at the right time, you have opportunity to make a ton of money long term. Now this is a stock I want to hold forever, so anytime I see a dip on this stock, I'm thinking about buying it or even like hard buying it. And right now, I'm definitely going to buy some. I don't know how much, depends on how much it drops in May, but I'm definitely looking into it closely. Now Disney Plus, I believe they're going to be the #1 streaming service one day. Now you can always say, oh, Netflix, they spend more money on it. But Disney is always going to have the better movies, in my opinion. So with that being said, let's talk about the dividend. Now, the dividend is very small right now. I'll put up the yield over here. But I know the payout ratio is only around 31%, and compound annual growth rate over 5 years is in the double digits. I think it's mid double digits or high double digits, which means the compound annual growth rate is how much the companies increase the actual dividend by for the last 5 years on average. So the dividend is going to be a huge factor in how much money you make long term, and I think Disney is going to make your yield on cost on the dividend very large. So with all of that being said, we can get into the next stock. For the third stock, it's going to be JP Morgan, but for everybody that just clicks away automatically, I'm leaving a bonus stock at the end, so don't do that. But anyway, JP Morgan is the biggest bank in the world, one of the biggest companies in the world, and they're way more advanced than the other big banks like Wells Fargo that's losing money because they can't change with the times. JP Morgan is moving more digital. They still have physical stores, but they're moving more digital. So I really like that about JP Morgan. And you know, if I said anything wrong in the video, by the way, just correct me because I could have misspoken. But let's just get into some of the stuff about JP Morgan. Their share right now is $93.25. Their 52-week high is $141.10. And during the crash, I was looking at the stock very closely, like when it was really bad and the stock market was dropping a lot. And the dividend was 4.5 to almost 5%. And I was like, ooh, I want to buy that. But during that time, I was actually focusing a lot of my money to Carnival, so I didn't really get to buy any. But I'm hoping that there's going to be like a second round of this crash. And hoping I can buy some Disney and some JP Morgan. Next month, I'm sure there's going to be some great deals, which is why I'm not going to spend too much this month. Just keep that in mind, that there's probably going to be better deals later, because right now we're having a semi-rally. But JP Morgan, it's always just a great stock to buy because how big the company is. And I forgot to mention the compound annual growth rate over the last 5 years, which is how much they increase their dividend on average last 5 years, is 18%, somewhere near 18%. Now that's literally insane because of how large the dividend. So for the bonus stock, before I end the video, it's gonna be Uber. And I know some of you are thinking that, you know, Uber, it's just an upstart stock right now, you know, it's IPO, but I really believe in the company, because think about it, Uber or Lyft, which one do you hear more people riding? Uber. Even though they're taking in huge losses, it's to grow the business. And this is like a Facebook, all right? Facebook had a market cap of around 50 billion when they went IPO. Uber has around 50 billion. But they're just going to completely change the business in the next few years. And I think they're still on track to be profitable in the next few years, even though the coronavirus is completely messing their plans up. I still think it's fine. And all the people say that it's not a real job to do that. Well, a lot of people want side hustles like that. So I just think it's really good. They're trying to expand in different markets. They still have a lot of expanding to do. It's really good to get in these types of stock early. And I just don't want to miss out on a stock like Facebook when I knew that they were going to grow into a bigger company, but I just kept listening to everybody that was not liking the company. I'm just going to really dive in and see more about the company before I buy it. But, I mean, it's really high on my watch list. So, before you click off of the video, just leave a like if you appreciated it, and bye.